Hey everyone, this is Martin from howtomakemobilegames.com on Monday, March the 5th, 2018. I think it's the 5th. I seem to say that at the start of every video, but I can't remember the exact date. Heading to work again. So I wanted to do a quick video talking about UK mortgages, investing in UK property, because I just started through my mortgage application process last Friday and the numbers are still kind of fresh in my head, and so I wanted to share those with you and explain sort of how much it costs, because I want to get into real estate investing more and more, and buying my first apartment, my first place in England is kind of the first step moving towards that. And then hopefully being able to find a lodger and then covering as much of the mortgage as I possibly can, even though I know that that is not going to happen the first time around. But yeah, let me just explain about that anyway, because obviously the first step towards getting houses is probably your own house as opposed to buying for other people. So I called my bank, and we had a mortgage, I had a call with their mortgage advisor, and they were talking all through the numbers. The bank that I use is Halifax in the UK, and the rates that they told me, I'm not going to go into very, very specific details here, guys. I'll try and be as specific as I can, but obviously I don't want to go into too much specificity, you know, on a public YouTube video, of course. But the rate that they quoted me, or the rate that they recommended based on how much I wanted to pay each month, was 4.39%. So the way that it happened was, we got on a call, the guy said, okay, how much do you want to spend each month? When do you want to retire? And let's try and find a product, i.e. a mortgage product, that is as close to that number as they can possibly achieve. So I said, okay, I'd like to spend roughly £500 each month, and over the next 31 years, which would make me 37 by the time it was paid off. 67, 68 by the time I retire. Of course, I'm not. There's a ton of things that can happen between now and then. I can pay off the house completely. I'll sell. I'll probably, I don't know. But that's the plan, as if I was going to stay in that specific home for the next 31 years. So he said, okay, great. So what they recommend is having a 2-year fixed interest loan at 4.39%. And that, with that specific product, I would be paying £537 each month towards the mortgage. There was no mortgage arrangement fee with that particular plan. So that means I save around £995. If I did pay the mortgage arrangement fee from the beginning, which in England is a cost to actually start the mortgage itself, that you pay to the bank, just another fee on top of the interest, for God's sake, I wouldn't make, if I was to pay the lower interest amount of 3.99%, I think they said, I think it was 3.99, it would be a lower interest rate, but I would have to pay the mortgage arrangement fee. And now over the course of 2 years, I wouldn't make that money back if I was to go to that lower fee. So if I did go for the 3.99% and only pay £510 each month, I would be saving myself, what, like £29 each month. But over the course of 2 years, that £29 or whatever it was, the calculation, I can't remember the exact figures, turns out to be £627 of savings, which would not cover that £999 of mortgage arrangement fee. So it makes sense to just go with the higher interest rate of 4.39 over the course of 2 years and not pay that mortgage arrangement fee. So that's good for me because it lays off some of the initial pressure. Even though I'm going to be paying a little bit more month to month, over the course of that 2 years, I do save more money. After that 2 years, I can then change the mortgage to either another fixed one for 2 or 5 years, or whatever I can achieve at the time in terms of what money I'm willing to spend, what the interest rates are at the time, whether the house has gone up or down in value, and I can maybe be paying less each month because now I have more equity in the apartment. I've purchased more of the apartment because I'm paying month to month. So that's cool. For me, I wanted to do the fixed mortgage rate anyway, because in England over the past 20 years, the highest that mortgage rates have been is 10.99%. Now, if you go on a non-fixed mortgage rate, that means that your monthly payments can go up to that 10.99%, which is set, I believe, by the Bank of England. Now, if your interest rate goes up to 10.99, in my case, that means I'd be paying over £1,000 each month towards that apartment, which is just insane. I would hate to pay that much each month. That would really give me a lot of pressure, and I wouldn't be happy about that, paying that massive interest rate. Interest is just making money on money, which is, you know, I'm just paying them for the pleasure of lending me money, which annoys me. So yeah, after the 2 years, I can switch to a fixed mortgage again if I'd like for the next 5 years, and I'd rather do that because it gives me peace of mind. Even though the national interest rates may be lower at the time, and you might miss out on that saving, I'd rather have the peace of mind and just know, okay, I'm going to be paying this much exactly each month, and I can calculate around that. I don't want to try to work around or figure out what the interest rate is going to be month to month, and then figure out, oh well, am I going to have enough money to buy things or food or whatever. So anyway, so moving on, that was the mortgage package that they recommended. I do have to pay £200 for a survey to be done. Now, I don't know if this is the same in other countries, but I have to pay £200 to the bank for one of their survey guys to go to the home and make sure that it is worth the price that I'm asking, the price that I'm going to be paying for it. Or in that case, if it's not, then the mortgage has to be adjusted, or I have to go back to the seller and say, hey, the surveyor said that it is not worth the amount that you're asking for, could you lower the price? And then hopefully they'll do that. So that's what needs to happen next. Then after that, if the survey comes back and they say, great, no problem, then the mortgage application is approved, and I'll have to then speak to my solicitor, who I will instruct to go ahead and contact the seller's solicitor and get the whole thing rolling. The solicitor costs is about £1,100, and I got a quote from 3 different solicitors recommended by my family, one of them close by where I live, and they came to like 1,070 or something like that, and the other ones were about, I think the most was 1,200, so not a massive difference. I'll go to the one which is slightly cheaper just because it's close by, and my family has used them as well, so that's why I'm going to stick with them. And so, but the first thing is, yeah, I've got to finish off this mortgage application process, which is, now that I've taken a look at what they recommend, I've spoken with my family about it, I've done a little bit of research to see what other bank rates are and what other lender rates are in England. They're roughly the same, you know, they're like between kind of, for the 2-year package that I'm looking at and the price and so on, and my deposit and the value of the place, it's roughly the same. It's kind of like 3 to 4.5 or something like that. Some are 2.5, but in that situation, it's going to be, you have to pay the mortgage fee up front, and I couldn't say exactly, but it depends on how much you're spending each month and how much they're willing to lend and so on. But yeah, so I did a little bit of research. Next step is to catch up with the mortgage advisor again from Halifax and say, yeah, let's go ahead, and then he will do a bank check to show that, to prove exactly, hey, yeah, I've got this monthly salary coming in, and there it is in the bank, and everything's fine. I've got the funds basically to pay them back, because if I can't pay them back, they can repossess the house or the apartment. So yeah, once that's approved, then paying them £200 to get the surveyor into the apartment and communicating with the real estate agent to make sure that that's organised and they have access to the home when they're coming along. And then after that, if everything's okay, speaking with the solicitor, instructing them to go ahead and start the process. This is where I'm a little bit fuzzy on what exactly is happening. Like they do like a search or something to check that the sellers actually own the house, whether there's any restrictions on things like building in the property or something like that, or any fees that might be owed. It's kind of a weird thing. They also handle things like receiving money as well from the bank and then sending that to the seller's bank and doing the mortgage registration and the land registry registration, which shows that the apartment will belong to me. So it's a 3-month process. I don't know about how it works in other countries, but I'm assuming it is something similar. Should take 2 to 3 months to buy. In the beginning of once my mortgage starts, I do have to pay 1 month plus the interest up front, which comes to around £930. I do get a cashback incentive though for going with my bank, where they would give me £500. So once the mortgage is approved, everything's signed off and we're good to go, they'll send £500 to the solicitor who I appoint. And I can use that £500 just to pay off the solicitor, or I can get it into my bank. Either way, I might as well just give the £500 to the solicitor and they take that off their cost. So it's interesting. This is the first time I'm going through this process on my own. And I'm glad that I'm doing this because I really do want to get into investing in real estate in buy-to-lets eventually. I know that it's gotten harder in England to do that. I know that the buy-to-let market isn't what it once was. Like, for example, in the 90s when it was sort of it was booming toward, I think it was the end of the 90s or something. And it's gotten harder. The recent new tax rules that have come into play, whereby the year 2020 you will get taxed on 100% of your gross revenue as opposed to your profit. So that is, even if you're not making profit in your buy-to-let, you're still going to get taxed. So for example, if you pay £500, or let's just say £700 each month for the mortgage, and the tenant is only giving you £500, you still get charged on that £500 basically, even though you're not making any profit. Because previously, let's say your mortgage was £500 and the tenant was paying £700, you got a profit of £200, and they would then tax you on that £200 profit, not the gross £700 that you receive in total. So that's changed things a lot, apparently. I still do want to get into that. I'm looking at sort of North Manchester area because it's a lot cheaper. Places possibly like Bolton, maybe. Places are a lot cheaper up there, but the rents are not proportionally cheaper. So if it's like, say, half the price for a house in Bolton, doesn't mean they're going to pay exactly half the amount of rent. The rent doesn't go down that much. So that's a good thing. What I'm saying is that the price is a little bit cheaper, but the rents still stay at roughly the same level as they would in the area where I live in Manchester. There's also other places like Prestwich. Looks pretty nice. I do have some friends there and they recommend it as a nice place to live. So I might be able to get some information off them. But yeah, that place as well. What else do I want to explain? I really just wanted to give you guys an update on the whole kind of investing path that I'm trying to take here. I'm not really an investor right now because I'm just buying my first home, and even though it is my first home and it hopefully will go through okay, I am looking at it from a business perspective. The idea being that let's say my total bills each month, let's say the mortgage comes to 550 just to round it up, plus 100 for council tax. We need to pay council tax each month in England, plus 100 for the service charge. That's £750 each month. Let's say bills as well come to 100. That might be a bit excessive. So £750 each month, okay? If I can get somebody to move in there for, say, £400 each month, which is possible. It's quite a nice place. It's got 2 bathrooms. If I can achieve that, so I would then only be paying £450 each month. Is that right? 850 minus 400, I think that's what I said. I'd only be paying £450 each month then, which is a huge weight off my shoulders. Obviously, it's not covering it. It's not fully paying for itself because I'm only giving a 5% deposit. I still need to pay 95% of the value of the apartment back to the bank. But I am looking at it from a business perspective and trying to save money. But in order to purchase buy-to-let homes in England, if you want to buy a house to rent it out to somebody else, I have to give 25% of deposit. Now, that's a lot more. So that's why I'm looking in other areas where I don't live at the moment, and more towards North Manchester, where things are a bit cheaper. For example, I could buy a house up there for, say, £60,000, or the value of the house is £60,000 or £70,000 for an apartment, let's say, and then I have to give 25% of that. What would that be? God, I don't know, 20 grand or something. And being able to get investment or do it with somebody else and being able to share that cost together in some way is what I'm kind of thinking. I know it's a very rough plan, but that's my idea. Anyway, guys, I've got to shoot off now. I'm sorry for the real quick video and just blasting a bunch of numbers at you. I hope you did find it kind of useful or interesting. But I'm going to catch up with you soon, and I will chat to you later. Bye-bye.